Hello, hello. Let's start. First of all, thank you. Thank you for all for coming here today. It's a big room, a big event. I'm very, very happy to be here right now. For those who are not aware, my name is Ricardo Mussa. I'm the chair of SB Corp, Sustainable Business Corp. Sorry for those who have listened to me talking about SB Corp for many, many times, but it's good to remind what we're doing and how we connect to carbon accounting, right? Sustainable Business Corp is a new innovation that came from Brazil for the COP. We learned over periods of time on the negotiations of the G20. The private sector organized itself to help the G20 over the years, for many, many years, for 17 years now. There is a tradition of the private sector gathering together on the B20 to help the G20. It was a huge success over the years what the business could help the public sector to engage and help on the discussion. So we created this year something similar for the private sector to engage on the COP process. It's called Sustainable Business COP. Just so you know, we have representation of more than 68 countries. Now Morocco has joined in. So we have associations of industry and commerce around the globe that we represent on the negotiations of COP. It became very large, so we have 41 million companies represented by SB Corp on the COP process. We have been recognized by the UNFCCC as a part of the negotiation of participating on the COP. So this is very important because we now have a voice how to really talk to the climate sector and present recommendations. And how this connects to what we are going to discuss today. Of course, in my previous life, I was the CEO of a very large renewable energy company in Brazil. I have huge debates about carbon markets, how to measure carbon, how we should tackle that. And when I came into this role and I met some fellows on that today is the carbon measures that we're talking today, I was really impressed how that resonates with what I had in my mind on running a renewable company and how important it is to really measure properly the carbon. So everything that we can measure, we can tackle. And it was really important to me. So when I was putting in place the recommendations of the COP process, the #1 recommendation that came to us was carbon accounting. So if you look in what we presented to the UNFCCC for the COP presidency, carbon accounting is #1. And why is that? Because that's the foundation for everything else that we're doing. So it's really, really important to have the carbon accounting right to be able to implement carbon markets, to talk about anything on the energy transition, and bring the finance sector to the stage. So that's why I was really excited when I saw the formation of the carbon measures. I was really going through the process, understanding everything that has been done and how we can support. So there is a full support for SB Corp to the carbon accounting discussion. I'm not saying that we have to throw away everything that has been done over the past 30 years on the carbon market, so GHG protocol, but I think it's something that I heard on the breakfast this morning. We're adding to the process something that will bring more accuracy, more transparency, and hopefully will bring much more finance and more money flow to this sector. That's what we want in the end of the day. So I'm excited to be here. I know this is a great event. I was in Belém yesterday. I did everything that I could to be here today. I'm going back to Belém tomorrow and taking again carbon accounting on my major priority to keep engaging with the public sector. So that's what I have. Hopefully we have a great discussion today. We have panelists. We are going to talk here about carbon measures. We are going to talk about what are really the milestones ahead of us, and hopefully we can even share more and more the passion that I have for this subject with all of you. So please, Amy is the leader now, the CEO of Carbon Measures. I recently met Amy when she was from ENI. Very excited, Amy, for you to accept the challenge and we'll have all the support that we have. So please have a great event.
Hi, everyone, and welcome. As Ricardo said, I'm Amy Bracio, and I'm excited to say that I'm the new CEO for Carbon Measures. So first of all, I just want to thank everyone for being here. I know that there's a lot of different programming that you could be at, meetings you could participate in, so the fact that so many of you came to join us for this shows just how important that you see it as well. I think we're all here because we have a shared commitment to do what it takes to reduce carbon emissions. I think we share also a sense of urgency around that. We wouldn't be here if we didn't see and feel the impact of climate change in our daily lives, and we didn't recognize the importance of the role of business in order to drive change. But I think that we also see that there is amazing innovation out there. There is amazing technology. Companies around the world are investing heavily in what it's going to take to drive a reduction in carbon emissions. But they're not necessarily seeing on the other side of the equation the demand. So tools are out there to help us solve this problem, but if you don't have buyers on the other side, you're not going to be able to get to the scale that we need to solve a problem that's as complex as we need to solve. And so that's why Carbon Measures was stood up. Carbon Measures was stood up because we want to create the market conditions such that businesses can do what they do best, and that is innovate and compete. So that is a lofty ambition, right? But it's a clear problem that we want to solve and how we want to solve it. So we look at the solution through two lenses, and a lot of what we're going to talk about today is carbon accounting. And one of the things that I heard earlier today was that this is all making accounting sexy again, which is very exciting for all of us who are CPAs. But we're going to focus on carbon accounting and the role that it plays with respect to underpinning what is required. So Ricardo raised that this is an and equation. Because a lot of times I get the question, why do you need something new? We've got all of these different things that are out there. And I think that's part of the problem. We've got all of these different things that are out there. And we've got to learn from financial accounting. From a financial accounting standpoint, we have generally accepted accounting principles, which means that when you're sharing your financial statements, people know how to interpret them. And so that's what we've got to get down to at a product level. Because if we want to create markets, that means that companies need to be able to differentiate their products. You need to understand how much, from a carbon emission standpoint, went into producing 1 ton of steel versus another ton of steel. And you've got to be able to make that comparison. We are not looking to set up another approach to disclosure. We're looking to get to how do you get to that level of specificity at a product level. And so that means that you've got to move from estimates to actuals. If we're all using the same estimates, you can't compare. And we've got to move to one molecule counts once. And that's what's going to allow for the comparison at the product level. It doesn't mean that the data can't be used to roll up to different disclosures, and it absolutely has to go across the value chain. But you need to be able to drive that product level comparison if you're going to compete and if you're going to regulate. And that's the next key point. We could do amazing things with getting better data out there through this more precise focus on accounting at the product level, but we'd still be operating in a world that was voluntary instead of mandatory. And so we've got to be willing to set targets. And this is where we need lawmakers, public policy to come in and set targets at a product level. Because if you set a target specification at a product level, you've got clear data in which to differentiate your products, then that's what unlocks the private sector to do what the private sector does best: compete and innovate. So we are really excited. You're going to hear from a lot of different voices today. We're really excited about where we are with our launch of Carbon Measures, the organizations that we've got on board, and the willingness of these organizations to show leadership in a time when it's easy not to lean in to a topic like this. And so that's what makes me so proud to be a part of this. So anyone who knows me knows that when I get a microphone, I always have an ask. And so for this, I actually have 2 asks. So the first is, I know there's some skepticism with respect to what we're setting out to do. And so what I would ask is just everyone, listen to the different voices that you'll be hearing through the rest of the morning And make sure that you're having curiosity with respect to what we're doing. But if you have skepticism, that's normal. So my only ask of you is that you keep an eye on what we're doing and judge us based on our actions. And so it's easy for me to say these great words today, but now the hard work begins, and you'll be able to judge us based on our actions. The second thing I would ask is that for those of you who are excited about this, please learn more and reach out. So we've got carbonmeasures.org, and you can send an inquiry through that, and we'd love to talk to you about what we're doing. But with that, I promise that's the end of the Carbon Measures commercial, and I want to turn it over to Paula Kavorski from the SB COP, who is going to moderate us through the first panel. So again, thank you everyone for being here.
So, good morning, everyone. It's great to be here. And so, I had in my script that I had to set the scene, but there's probably not much to say after Musa and Amy. It's very important to see this initiative flourishing, and I just want to share, how important how much it could have helped us a few years ago, back in time, when I was together with Musa as a vice president for strategy and sustainability and M&A for a biofuels company, trying to convince my shareholders that increasing ethanol production was a good idea. And they were measuring, or they're trying to measure the impact through scope 1, 2, or 3. And should we stick to that, we wouldn't have increased production. CI, carbon intensity, was the answer. And I think this is why we're here. We want to make it happen. We want the market to be able to understand what's the intrinsic carbon within every product, your steel, your air liquidity stuff. We want to be able to have in your balance sheet what's the asset and what's the liability, so that everyone can measure and everyone can manage. So let me stop talking and talk about my amazing panelists. So we have here Diana Chilag, member of the Air Liquide Executive Committee in charge of sustainability, Marco Antonio Ochon, Global Head of Corporate Banking at Santander, and Grazi Parente, Executive Vice President of Sustainability at Vale. And I'm going to start with you, Grazi. My great friend and partner in crime over the years, talking about sustainability. So can you take us through the role of Vale low carbon products in the global decarbonization journey? What are the opportunities for Brazil specifically, the main bottlenecks? And, the tough question, has the market acknowledged the value of your contribution?
What a good question. So good morning, everyone. Very glad to be here, to be with my friend, Paula, and Musa. Thank you again for putting everything together. COP is arriving, so it's good to see that, and Diana and Marco to be together. So I'm so glad to be here to discuss, after so many diagnostics and being for so many years discussing the why to do. But now we are working more on how to do, so this is great. The other thing is, Vale is a mining company, so everybody likes nowadays to talk about critical minerals, energy transition, all these things, but you have to have a mine company on the beginning of all this value chain. So we are integrated in steel value chain. Steel represents around 9% of the total global emissions, and mining is a tiny part of it. So you can figure out that my scope 3 is by far, most of our impact on that. So we understand that to move to this decarbonization, which for us is not just a nice thing to do, it's our business strategy. Everyone that can go to our website can check this, and this is what we are doing day by day. And why we do that? Just because it's nice? No, because we see the value for Vale because we have a very rich endowment of minerals with high quality. And so these minerals are essential for this energy transition. And we are also working on how to develop products for our customers that their customers will also value. And so we have been working in, so we take the rock and then we turn out in some portfolio products that have to address exactly what is necessary for our customers. The other point is how we use the energy for that and how we help our customers on the end to use less energy, lower temperatures. So we have been working in portfolio of agglomeration, which is what we do, and then we sell this product agglomerated for the customers. So we developed here the briquettes, which is an evolution for us, and we use 80% less energy in our case to produce, and our customers, without any change, they can also reduce 10%. So this is great. But what we need for that? We need the offsetters to value that. And how we are able to say, because the taxonomy is very important. So what is green steel? So green steel can mean a lot of things for many people. And so that's why we think that being in the Carbon Measure Initiative is critical, because if I ask any person here in the room, what is EBITDA? How to calculate? If you're a business person, you know. But carbon measure, what is a green steel? So that's the thing that we need to cross. We need to be very clear about the standards, the harmonization. As I said in a meeting just before here is, I don't want to spend my budget and the time of my team in trying to understand the 100 certifications we have and the many accounting programs that we have. We want to have one, because if we have this, we are able to sell internally for our teams to get on board on that, and we are able to engage the rest of the value chain, but also the society to understand that carbon intensity matters, right? That adaptation is the new mitigation. So these are the things that we need to talk about. Thank you.
Thank you, Grazi. This is really key, right? We need the metals, we need the minerals. We just need to make sure we get the better ones in terms of lower carbon emissions. It should be simple, right? So Diana, let's open a little bit the discussion to a global perspective. Can you share your views on the importance of clarity around policy measurements and accelerating carbon action, establishing markets for low carbon products, and also if you can share with us some concrete customer examples on the recognition.
Yeah, sure. Great pleasure. Thank you very much to all of you for having Air Liquide here. So first of all, maybe 2 words about, for those who don't know Air Liquide. So we are actually producing essential molecules like oxygen, hydrogen, nitrogen, argon. And why are they essential? Well, they're actually used in almost all industries, and especially in manufacturing industries. So our customers, most of them are actually in the hard-to-abate sector, and that's why our role here is so essential. That's why we joined Carbon Measures the first day it was actually created. So what do we see? First of all, we have been engaged as the pioneer in our own industrial gas industry on decarbonization. We had a Capital Markets Day in 2021 setting our net zero objective for 2050. We have reached the inflection point far before 2025. We have reduced our own emissions by -11% in 2024. So you could say, well, great, everything is working fine. We have a role to play, as I mentioned, for the industry and for our customers. And that's where we develop not just gases, but as well technologies to capture, for instance, CO2, and as well services in terms of logistics and to prepare for carbon sequestration. So our role is not just to reduce our own emissions, but to help the world to decarbonize. And our investors and analysts always ask us, so what's happening? Where's the energy transition? And as you can imagine, right now, we get actually a more challenging question. Well, Diana, is it really happening? What do you see in the world? Because, of course, there are a lot of headwinds. And actually, I must say, there is still a lot going on. I mean, let's look at the US. You could think that, well, maybe all the incentives are tuning down a little bit. Well, actually, we still have pretty great dynamics going on. We still see many large projects happening and are undergoing. It's going through tax credits. You know, the 45V, 45K, now in the OBBB. So it's still going on. It's not dead yet, but the visibility long term, that's the one point that we could question. So where it was before that really a long-term sustainable engagement, the time has shortened, so you better hurry up to get your tax credit. In Europe, well, it was all about go green. Nevertheless, with a very strong regulatory and reporting frame, and I think that's what you mentioned as well, Graziella. So I'd rather spend my team working on developing innovative decarbonization solutions than have them work on where to respond to the 1,600 data points that we need to report in the CSRD. By the way, we are the only one doing it because we're the only European-based company. Our main competitors are American, and their reporting is pushed out. So speaking about competitiveness, not there. Nevertheless, we are building the largest electrolyzers right now in Europe. It's happening. Normandy and the Alligator projects, just to name two of those that are very public. Last mention about the world, just a tour of the world, China. We should not forget about what's going on in China. We see great dynamics in China with the electrification, and we just recently signed again another project to electrify one of the air separation units. So it's not dead, but we are clearly nowhere where we need to be to really help make a difference for the planet. So that's why we are here for this call to action.
Thank you. Now to you, Marco, and I love the time to ask the banks and to ask about funding, you know, finance person by background, and see, you know, this carbon accounting thing is, let's make sure they understand what we're talking about in finance terms, right? So the bank remains committed to funding the energy transition, of course, but how do you see the real appetite of the market? And most importantly, you know, what are you or what Santander is willing to offer to help unlock funding?
Thank you, Paula, and delighted to be here and with my esteemed panelists. So just start by about mentioning a couple of data points. Santander has been doing green financing to the tune of 165 billion euros from 2019, and we have a commitment to get to ahead of 220 billion again in green financing before 2030. So what are we seeing in the market? The market is ready. The market has capital. The banks have capital. As I say, the banks are ready, willing, and able to deploy capital. But when you do that, you need to have certainty, or at least some educated information. And there's one thing that investors and banks in general hate is bad news. But what they really hate more is uncertainty. And the reality today is that we don't have any certainty. We have plenty of uncertainty. So if you have traceable, verifiable, consistent data, then you can underwrite, you can deploy capital. If you do not have that, it's obviously very difficult. And that's what hindering or slowing the process. I feel obliged now that we are in Brazil, the country of Ayrton Senna, one of the greatest. And basically he had this saying that when it's sunny, it's very difficult to overtake. But when it's rainy, you know, you can overtake 15 cars. Right now, we're in a situation where we are in a not sunny situation. It's rainy, it's uncertain, you know, you don't have one single set, you don't have verifiable, you don't have traceable, some tons are accounted twice, 3 times. If I say banks are all about capital allocation, as I say, if you count a ton twice, you fail twice in your capital allocation. So that's one of the pickle that we're in, but we're very excited about carbon measures because we think it's the way to solve this problem. The time is now. It's a business-led coalition, so it's from the people that really know, that are in the trenches every day trying to help clients. Banks, we're here to help clients, and to help in Santander, our motto is we are here to help people and business prosper. And I think the carbon accounting is a key element of that. Thank
you for that. Now, we have only, the clock is ticking, as we see there. So I'm going to make one question to the three of us, or to the three of you. And I'm going to follow Amy's idea. So what do you want to ask for the carbon measures to deliver, the three of you, before we finish?
When I met Amy today, I said, Amy, you have a good job. And so my ask for you, I would say, Amy, and for you personally, is let's be very focused and mindful of the dedication that the team is putting on that, and really go to the deliverables on that, and have clarity of what we are looking for. Otherwise, we can become can be a scientific article. So that's what we don't want to have. Yeah. The other thing is, it's so good to see a clear initiative where the private sector is taking the lead. And it's exactly what the Brazilian presidency is advocating for. The ambassador André Corrêa do Lago has released 8 letters for the society for this COP. And one of them is just about the role of the private sector. So the fact that we are there, I think that it's, because I always said, when I see the NDCs of the government said, who is going to implement it? Not us, because the economy is creating all the conditions for that. So I would say be very focused on bringing new people inside, new companies. I think it's important to give this credibility and also to advance on that. And last but not least, make it simple, because people need to understand. If it's something just for experts, we are not going to engage. So try to, if it's possible, I would ask, try to make it simple. Thank you.
Okay. Yeah, fully in line. Just maybe to add a few points. First of all, I think it's great that this becomes a real coalition. And I'm looking forward to all of those of you who are interested in joining, and don't hesitate to come to see one of us or Amy to let's talk about it, because it only works if we are strong enough and big enough, and if we are large enough. Why am I saying that? Because we have launched a few years ago the Hydrogen Council, which is now more than 140 members. So, and I can tell you that changes everything. That changes how you're listened to. So the impact, and let's be super clear, why are we doing this? Because we want the rubber to hit the road. We want to accelerate. We want to have the impact and create markets. So industry should take the lead, and that's why we are all here. So let's really take the lead and come up with very concrete proposals so that the policymakers can implement product mandates that decarbonize the markets and create by this the market demand. And it has already worked. So for policymakers, why don't you just look at the product mandates that worked in the past, like the desulfurization of diesel? We discussed this morning. So there are a lot of examples that already worked. By the way, it developed a great hydrogen market for us. So look at what's worked and try to transpose it to other activities, work together, industry coming with proposal, policymakers on engagement, and then move forward on decarbonization.
And I couldn't agree more with what has been said. I would say that carbon measures is the single most exciting thing that has happened in a long time in the carbon industry, and I think it has a wide impact. I think the fact is business-led, as I said before, is critical. I think, and I would only add one additional point. Quoting Pelé, no single individual wins a game by itself. So carbon measures is a coalition. That's why we invite other members to join. And I would add, it's not the sense of urgency. I think it's another stage. It's what I call the sense of immediacy. It's now. It's what are we doing now? What are we doing today? And that's the spirit.
Great. So let me finish by leaving my ask as well, if that makes sense. Let's not forget nature and agriculture in this process. Measuring nature is complex, it's tough, but it's doable. And when we think about carbon accounting as a block, it's important to think about the entry point of each industry. So your industry is going to be like on a per ton basis. We're going to think about agribusiness on a per ton basis. We're going to think about fuels on a per megajoule or megawatt or whatever basis. Let's not forget nature solutions from forestry and what have you. And also the very important part of it, which is agriculture. So that's my ask. Let's make sure this industry is also taken care of. So with that, I thank you very much for the panel, and I invite now Mikala Krishnan to take care of the next panel.
Well, good morning, everyone. I am Mikala Krishnan. I'm a partner at the McKinsey Global Institute, which is McKinsey's business and economics research arm, and I'm really excited to join you all to continue this conversation. Before I introduce my panel, maybe an ask to all of you. We had an Ayrton Senna quote and a Pele quote, so think about what sports personality you're going to channel in this panel as well. So we set a high bar, and we
I will ask ChatGPT quickly here.
There's going to be some furious typing that is happening on the side on mobile phones. Well, I'm really thrilled to have this panel. Just to introduce everyone here before we dive in, we have Rex Query, who's the EVP of Strategy at Nucor, Amanda Hickman, VP of Research and Sustainability at Honeywell, Pedro Pereira, the Chief Sustainability Officer, LATAM and Caribbean at SAP, and Marie Fryer, Head of Sustainability at Barclays. So thrilled to have this conversation with all of you. As you can see, this is a diverse panel that spans many, many different sectors, so we want to try and get different perspectives and different viewpoints as we engage in this conversation. Maybe just a little bit of framing before we dive in. As others have said as well, we've made a lot of progress on the energy transition. We've seen enormous innovation of various sorts, but the fact remains we're not moving quickly enough. Our estimates at the McKinsey Global Institute would suggest that we are moving at about half the required pace we need to be moving on deployment if we look across sectors on average. Some sectors are moving faster than others, and then there is this very thorny category of sectors that are often referred to as quote-unquote hard-to-abate sectors, where we're at very, very early stages of the transformation from high to low emissions technologies. And so part of this conversation is how do we continue to maintain the momentum? How do we continue to drive innovation? How do we continue to think about creating durable markets for low emissions products across sectors, not just at the sectors that are making progress today, but the whole economy? So with that in mind, what we want to explore in this panel is how can targeted policy data supported by a robust accounting framework actually do this? And at some level, this sounds very lofty and theoretical. And so what I want to do with this panel is to try and actually understand what can those things, policy, data, and an accounting framework, why does that actually work to drive progress? What can that actually do to drive progress? And so we'll talk a little bit about how the presence of policy data and an accounting framework can actually enable innovation, drive differentiated products, help companies achieve their emissions reduction goals. And then we'll also talk about what kind of data are we actually talking about, what is the role of comprehensive data in enabling all of that. Okay, so with that, let me start with the quintessential hard-to-abate sector, steel, and come to you, Rex. So steel is obviously a challenging sector to decarbonize. It's also a global sector, which creates its own complexities. So how would, imagine a perfect world where we've got perfect policy, perfect data, a robust accounting framework, how would your industry, you think, take advantage of that to try and decarbonize and drive innovation? No, leading question a little bit, but would love your perspectives on that.
Yeah,
Appreciate the question, and just thank you for the opportunity to be here. Not to disappoint, I will start with a quote. It will not be a sports figure. We'll go with a historical, political figure.
That's allowed. That's acceptable.
And it goes something like, "It is no use saying we have done our best. We must succeed at what is necessary." And when I think about the environmental side of things, what is necessary is that we have success, we achieve, we improve. If we do not set out with some goals and targets, we're not going to get there. Let's go sports figure, quote Yogi Berra, "We're lost, but we're making great time." So we have to have direction as to where we head. You know, in the still side of things, earlier at breakfast I commented in regards to the comparison with safety for us. And for many, many years, the thought was you can't improve safety and efficiency at the same time. You're going to compromise one or the other. You're going to give one to get the other. And that is absolutely not true. You have to have the mindset that you can accomplish both, you will accomplish both, and then empower our teams to do that. And it starts with a measurement, some consistency. What does success look like? And then if you look, we now have it standardized as to what an injury and illness rate is, those measurements. I have a financial background. So we started with the Amy and the accounting principles that were mentioned. So what I see in an industry for steel, to agree on standards, much like the accounting side, a little bit of human nature in regards to wanting to succeed and be the best takes place. You are being measured. You are being stacked up against your peers. You are being compared to others around the world. And here's where you stack up. And when it comes, just like with safety, when it comes to the environment, I think consumers do care. We have to equip them with knowledge. And we have to show that it's independent, it's verifiable, it's comparable. And now they're going to choose the things that they're going to take care of the environment. All of us live in a community and a neighborhood, and we want that to be a great neighborhood. So that's how I view that. I think that would occur, but we also have to ask that and require that at times.
So some healthy competition and some consumer demand that can be enabled through this. Continuing our sports,
yes,
sports
on the
and
sports
competition
side.
on the sports
Very
side.
much.
Amanda, similar question for you. So Honeywell has a whole range of quite differentiated products. If you had the right policy, the right data, the right accounting framework, what would that allow you to do in terms of unlocking innovation?
Yeah, thanks for the question. And let me just say thank you to all of the organizers today. Really appreciate the opportunity to be here with you all. You know, for Honeywell, as you mentioned, we have a very diverse portfolio. And we've really aligned our business around a couple of key megatrends. And two of those megatrends are the energy transition and automation. And the thing that is truly right at the center between those two megatrends is data. And so we feel very, excited about the opportunity to really lean into that data and use that data to drive forward markets, to drive forward that energy transition. I guess the message I'd want to leave you with today is that we have a lot of the technology and a lot of the capabilities already there and ready to go, right? We can already kind of take our center of process technology that we offer to the market. So these are the kinds of technologies that we license for carbon capture, renewable fuels, energy efficient fuel production. And then the technology on the other side for the automation of those units. And so as you connect those plants through connected solutions and digital twins, you get access to the data that can drive key performance indicators and key metrics. But the challenge that we see out there for our customers is there's no sort of standard for which one of those metrics that we should all be using to really judge ourselves and compare ourselves. And so, even as we, sit with our competitors to try to say, okay, how do we drive forward this industry? How do we push for even lower carbon intensity? We've got to have that sort of that framework that we can all use to compare and to drive that. So I think data truly is one of the key enablers that's there, but it's how we process that data, how we turn it into a metric, and then use that policy framework to sort of drive goals. And we've seen this before, right? We saw this with ultra-low sulfur diesel. We saw this with unleaded gasoline. And if we can build the key metric and then the policy to drive those metrics down in a way that fits for the market you're in, we can drive innovation.
So essentially, you can manage what you measure, and you need to define what you measure.
You got it.
Okay.
Yeah.
So Pedro, I want to come back to you in terms of the measurement in a moment, but maybe let's talk about finance first, and then come back to the data underpinning all of this. So Maria, I want to bring you in. You're at Barclays. Of course, finance matters in all of this. We need the real economy to move, and then we need finance as a provider of capital and all of that. At Barclays, as you think about project financing and sustainability and the interplay between the two, what are some challenges that you're seeing in terms of how to link the two, and how are you thinking about navigating that? What's the role of better data in helping you navigate that?
Fantastic. First of all, is this like the banking hot seat, I think? No? Following Marco?
I know, there's like an order that seems to be emerging.
First of all, prazer, obrigada. Thank you for having me. It's great to be here. Let's get practical. Maybe some examples would be helpful. So to state the obvious, and forgive me for those in the room who work in finance, we're always thinking about risk returns, right? So we're trying to find the appropriate opportunities to deploy our balance sheet or to advise clients, investors maybe, who are buying into projects or into corporates, but we have to hit that risk return. And of course, ultimately, what I think we all want in order to accelerate the energy transition is to find the lowest cost of capital to bring to bear on those various opportunities, but the maths has to work, right? And so where we think this could be incredibly helpful and come in is, I'll give you an example of what we already can do and where I think we could incrementally do more, again, speaking for ourselves, but also speaking for a wider investor community. So we were very fortunate in that we were able to be lead arranger and hedge bank for the Net Zero Teesside project in the UK, the combined cycle gas turbine with CCS project. Interestingly enough, so when you think about those risks and what we're trying to figure out, technology in terms of broad performance we were less worried about, so we were quite comfortable. But there's a real question around the performance of the project in terms of being able to deliver the kind of carbon capture that was required, again, in the overall investment case. So there's a lot of enhanced due diligence, and we got there, and we were really proud to do that. But what do we want to do more? What is specific about these projects that we have been able to do? They tend to be domestic, right? So it's one country, and they tend to be a captive market. So what we really worry about is that demand certainty. Marco said it earlier, right? That certainty of demand, the demand pull-through. How confident can we be? So if we think about other sectors and global markets, if we think about steel, but other commodities and hard-to-abate spaces as well, if we think about CBAM and other equivalent measures, how can we get that same comfort? How can we get that same confidence? How can we do the same due diligence in our underwriting process? And that's where this accounting method, we believe, can be incredibly helpful so that we can bring the same kind of cost of capital to bear in those broader settings.
Yeah, someone once described to me that finance in the energy transition, finance alone can be like pushing on a string, and you need the demand pull-through, and data as an enabler of the demand pull-through is critical. So Pedro, I want to bring you in. You're at SAP, so data is a big unlock. So can you describe a little bit where you see the role of data and what the quality of data is, and how you think about measuring these sorts of things for different companies?
Absolutely. Well, I will start with a quote from Christian Klein, the CEO of SAP globally. Sustainability must be profitable, and profitability must be sustainable. Those two things, they are not disconnected. So SAP, everybody probably knows SAP from helping you with accounting, and we're talking about carbon accounting, but financial accounting has taught us a lot over the years, and that's our perspective on sustainability, because we want to bring the data of sustainability closer to the financial data. This is how you show value. This is the challenge we have ahead of us. If you think of how the financial data comes from the day-to-day organization, are from business processes. If I make a purchase order, if I make a transportation, every business process generate an accounting record so that we can consolidate. And the way we solve to this over the years across many standards and frameworks is to work at the lowest granularity of the data in order to aggregate to whichever stakeholder that is out there. We call that the financial ledger. That has been the great innovation that helps organizations to make decisions confidently and be audited, and there's just one version of the truth in terms of finance. Well, what we are doing for sustainability is exactly the same, but for the footprint of the organizations. We call it green ledger in order to bring from the experience we have from a financial ledger. It's a parallel ledger from that financial ledger, which makes the P&L of an organization completely connected to the scope 1, 2, and 3 and the carbon measures that you want to see. So this is one level that gives us confidence that the same criteria we have for money will come from carbon. So treat carbon like money. That's the philosophy that I think will take this topic to the next level. But one emerging topic for all of us as we face a huge transformation in the world with artificial intelligence is that those models, they will extract from your business context and will give you information. Show of hands here, who exports to Europe right now in your business? Please raise your hand, let me see. Like a lot of you. Probably you are affected by CBAM, by EUDR. You have to have the traceability and you need to use that data in your day-to-day. Now imagine those agentic AI models which gives you an interface that you talk to it and you say, look, I want to know what's going to be my margins on exporting to Europe next quarter. Well, it will take the financial information, it will take some of your operational information, and if it doesn't have the sustainability memory, it will hallucinate. That is a big challenge a lot of us will face if we don't turn those carbon measures into training data for the large language models. This is an emerging topic because I'm sure everyone here represented will have an AI strategy, isn't it? You want to automate with AI the maximum you can. It's work, it's there for you 24/7. But without sustainability memory, it will not have the right context to do that. So if you combine the ability to bring the sustainability data closer to the financial data and also use all of that to enable your large language models, your agentic AI, the new way of running businesses over the years, this will be a risk, but I have to say also a huge opportunity. So the time to get it right now is today.
So terrific. So it's I love the idea of it's not theoretical sustainability data. It's actually linked to your actual real life financial performance and business performance. And also the ask that this is the time with great power comes great responsibility. So actually using these data sets well and robustly.
And just to be clear, it's not like an aggregated level. I mean, if you want to buy something in your company, you use a procurement system that generates a purchase order. In a traditional purchase order, you have quantity, you have delivery date, you have the price, isn't it? What about the carbon information of that, purchase order? So we need to go into every single screen of systems and embed carbon measures into that, and that's the goal.
So you're rising to Amy's challenge of making accounting sexy, so that's great. I also slipped a Spider-Man quote in there, with great power. Did somebody notice that? With great power, anyway. I want to bring you back in, Rex. A few folks have alluded to this idea, and you mentioned it briefly as well. We're also not doing this in a single jurisdiction, right? We're in a world where there are multiple countries participating, maybe different standards that are starting to emerge across different parts of the world. Some that are voluntary, some that are mandatory. So how does Nucor actually navigate all of this complexity that's happening, this patchwork of standards, and what would more harmonization allow you to do?
At the end of the day, for most everyone in a for-profit business, your obligation is to deliver a return to your shareholders, to take care of your teammates. how you go about doing that does matter. And doing it with integrity, doing it in a fiduciary responsibility way to the environment, to our industries, those things matter. And I would, back to where if we don't start heading in a direction, start to try and get people to coalesce around some standards, we're not going to get there at all. And, you know, I can go to some things that are cultural for us in Nucor. I've often stated leaders lead, and you step out front, and you regardless of what those around you are doing in your industry, if you feel that's the right thing to be doing, then do that and show you can generate success from that, and others will follow. Is there fear? Yes. Is there the unknown? Yes. Have courage, step up, and show that those things can be accomplished. So I think starting along a standardized path of how we calculate transparency, that's the other thing. When you approach things from a position of, I'm going to call it integrity and right, you don't mind accountability. You don't mind someone seeing how your methodology works and how that's calculated. And I think that puts pressure on others as well. So I think that transparency, showing it's comparable information and it's verifiable, and you're not afraid to do that.
Terrific. So I think building on this idea, I want to bring Marie and Amanda, you in as, you know, one of the things that we have sort of implicitly been talking about is this notion of a value chain, right? And that there are different players in a value chain, and Marie, maybe starting with you, you brought forth this idea of demand and the need for the demand pull-through. So how do you actually, if you think about the need to increase maybe coordination, collaboration across a value chain, can you talk a little bit to what you see the role of better data, better accounting methodologies, better policy in enabling that coordination and different actors playing their role across the value chain in reducing emissions?
Yeah, I think partly it's what we've already said, right? So internationally accepted, aligned standards in this process, getting in that confidence and that trust. Again, maybe trying to work with an example as well. We're very proud with the work that we're doing through the Sustainable Markets Initiative, the SMI, where somewhat very conveniently for this conversation, we've decided to focus one of the projects on CCS, even though it is the Financial Services Task Force that our CEO chairs. And to me, it's about getting really specific now and saying, yes, we need on the one hand these broad alliances, but then we need to work together across the supply chain, and that's where the data obviously comes in as well, to get really concrete about who can do what and where the pain points really are. And so, for instance, as part of this work, we had workshops both at London and then New York Climate Week across the piece, so both from investors, but also the actual project developers, individual corporates, policy, like the whole shebang, and say, well, what are the projects that we think will happen anyway? Because let's be honest, there's maybe large energy corporates that, for them, that works. What are the ones that are so far and so difficult? Well, let's just bracket them. But can we find a subset? And we did. They were pre-FID, but they were not early stage development. They were late stage development. And now we're working on narrowing down even further where the funding was really hard to come by. Like, what were the uses that certain more traditional infra funds, for example, weren't able to finance? For example, long lead time items in their supply chain that they would want to sort of make the down payments for as part of the actual project development, and that was sort of difficult. And we've got a list of others to say, well, let's really get specific about where things are breaking down, and the supply chain becomes a large part of that, but broader, and use the data we have available to quantify that, and then be able to be much clearer with each other and with ourselves about where we can step in and we can sort of get over those hurdles, and where it might just be too difficult at this point.
So basically, by having better data across the value chain, it allows you to both understand where there are bottlenecks and then which parts of the value chain can be easily addressed, very hard to address, and then that messy middle, where there can be focus and attention. Amanda, similar question?
Yeah, maybe I would just add on kind of from a technology standpoint. So I'll use the example of sustainable aviation fuel. A project in sustainable aviation fuel doesn't happen without the full supply chain coming together. You've got to have the feedstock supplier. You've got to have the technology provider. You've got to have the person who's actually going to build, own, and operate that asset. And then you have to have the person who's going to have that offtake agreement, who's going to take that sustainable aviation fuel. And as those large and I should not leave out, you need the investor, right? You need the person who's supporting that capital investment. And you need to bring each piece of that value chain together to make that final investment decision. And as a technologist, one of the things that I've seen is each person in that value chain has to go through their own due diligence to really evaluate the technology. And at Honeywell, we offer not one, but 5 different routes to sustainable aviation fuel, just as one provider. And so we're now having to engage with each one of those individuals to think about, hey, what's the best route for you? What makes sense in your location, with your feed stream, with your goals and metrics? And I think as we can standardize and have a consistent way of setting those metrics, we can accelerate that process to FID. And at the end of the day, that acceleration is what will drive decarbonization and drive these markets.
Terrific. Rex or Pedro, do you want to come in on this question? How can better data enable an entire value chain to decarbonize?
Well, the value chain works independently, right? So you have your suppliers, you have the suppliers of your suppliers, and this is a big problem to have. At SAP, we have the ERP, which helps in different processes internally, but also we have the business networks. It's a big investment we have made because we understand that it is a network that helps organizations to be where they are. And for us, when it comes to solving that problem, we understand that sustainability needs a data exchange. Right? Because if each one is doing their part, they will have to find a way to exchange that information that helps each other and drives collaboration. So that is available in the business network environment. So for us, the more networked organizations operate using blockchains, using traceability that goes beyond their own boundaries of their own gates, this will help them have more visibility and help each other. We've seen some customers that they are creating incentives using this kind of data in order to get their suppliers that usually are small, medium companies that don't have the level of sophistication of our most complex customers, for them to act on it, because it feeds back to them as areas of improvement that they can report.
So if I'm an automotive company, I can measure the footprint, my emissions footprint in assembling a car, but I can also go backwards to say what are all the components that I'm buying and what's the emissions footprint associated with that, and work upstream.
Absolutely, and that should be subsidized, by the way, right? I think we as big organizations, we need to find ways to subsidize the smaller ones so that we create a big effect of everybody joining the party.
All right, so on that note, thank you all. This has been a terrific discussion. I think some of my takeaways are you need the entire value chain to play a role. You need the clear demand signal, and that needs to be enabled by better data, because once you have better data, you can manage, and once you measure effectively, you can manage. So thank you all. Really appreciate you taking the time.
Thank you.
Thank you.
Good morning. Good morning. I think this is the first panel where we've tried to wreck the stage. So just to introduce myself, so my name is Colm Devine. I've just taken on the role of Global Vice Chair for Sustainability for EY, succeeding my dear colleague Amy on the stage. And I've been in this role about 4 weeks since I took over from Amy, and I was very excited about joining the pre-COP and COP, the last couple of days, and I've ended up in conversations around Spider-Man, Formula One discussions, and karaoke. So I think we'll have to try and centre my role into sustainability. I'm going to just set the scene a little bit just before introducing the panel. And I guess coming to into COP, and it's very clear that the role of the private sector has been mentioned so many times in the last few days. The role of the private sector of trying to deliver this ambition, bringing it to action, has become really, really important. And also, we're also in those hard yards of delivery. And that's a clear theme that I've seen from my background, which is we're really in the bowels of transformation. But we can't do things that we can't measure. In fact, it's difficult, to do things that we can't measure. And so it's inevitable that we will see things evolve, particularly around standards. And I have, in my own career, been involved in various high-level, high-profile roles around helping set standards, and it is difficult. And that really draws upon, in my experience, also the need to draw upon businesses and communities, and how do we get their input to actually help make these standards be inclusive, and draw upon also what others are doing. There's no question that as these things emerge, that creates noise. I think it's important to demystify some of that noise, and actually part of the discussion today, which I want to turn into a conversation, is what is the role of the independent technical expert panel? And actually, let's try and demystify through this conversation, what are we trying to achieve? And actually, how are we going to really embrace the views of the business community? Which again, as somebody who speaks with an Irish accent in Brazil, the views are very diverse. It is a global, this is where we need global input. So I guess the role today from this panel is to understand the role of the technical panel, which I emphasize probably needs to be independent, but we're going to test my colleagues to the left just on that. So let me just introduce, Amy, you probably don't need any introduction unless you want to add anything further.
No, thank you.
No? Okay. Gabriele, do you want to introduce yourself quickly?
Good morning, everyone. I'm Gabriela Doliac. I'm the Executive Director for ICC in Brazil. ICC is a business-led organization. It was created more than 100 years ago. It's a global institution, and I think very fitting with the topic here, it's an institution that has, for 100 years, dedicated itself to creating the same language for business to trade across borders. So there are many, many examples of where ICC has set standards, contract clauses, and it's really the objective is making sure that we are competitive, we're all speaking the same language, we know what we're talking about, and making things easier for businesses to interact with each other. So I don't think there's a more fitting initiative for ICC to be involved in.
And how many members do you represent?
Globally, 45 million. In Brazil, over 200.
Wow.
So.
How many are you missing? We'll come back to that. But that's compelling. If I could turn to Mark at the end. Mark, if you want to introduce yourself briefly.
Absolutely, thank you. And first and foremost, thank you to Carbon Measures and the group for inviting S&P Global to be participating in the event today. So, Mark Ermo, I'm here in my role of co-president of the Commodity Insights division of S&P Global, which is one of 5 divisions familiar with the ratings, the indices, market intelligence, and mobility. And so I've been co-president of what's called Commodity Insights, where from energy markets through many, many downstream markets, we're looking at not only pricing that's happening every single day in the markets, but then looking at near-term, short-term, long-term dynamics in all of these various markets. And I'll comment up front, because I've been asked a few times, why is S&P kind of engaging on this initiative? And if anything, at the highest level, the businesses that we're in and that we support for our customers, every single day we're generating and working on high-quality data that's derived from transparent and accepted methodologies and standards, upon which then companies can transact, capital formation can occur. And so from that perspective, there's a knowledge base here of how this can work going forward, and how the markets do look for product differentiated information of high quality data that can be trusted. And so from that perspective, we see this as certainly a big ambitious goal, but one that's needed, and that the timing is right for the market, for the private sector to really pursue this. Thanks.
Thank you, Mark. And Karthik, last but not least.
It's a pleasure to be here. I'm Karthik Ramana, and when I'm not knocking bottles off the stage, I am a professor at the University of Oxford, the Pragmatic School of Government, and the director of what's called the Transformational Leadership Fellowship, which is a program for CEOs and former heads of state who want to come spend some time in Oxford. I'm also the co-founder and principal investigator of a research group called the E-Ledgers Institute, which has, over the last 4 years, helped develop the underlying theory academic theory behind product-based, ledger-based product carbon accounting systems. So our research group has people who have expertise in financial accounting, in engineering, in obviously issues associated with auditing, and also in carbon markets more broadly. And we're based beyond the University of Oxford. We've got colleagues over at Harvard, at Stanford, and MIT. So that's who I am, and delighted to be here.
Thank you, Karthik. And actually, I was really keen, well, partly we did choreograph the damage, didn't we, just to make it a little bit different to get us started. But I was keen that you introduced yourselves, because I suppose one of the outcomes that I was keen on as somebody who advises lots of clients is, and our role is independence, and I want to make sure that the independence comes across, if that's okay to emphasize. And I'll maybe turn this first question as we get the conversation going, starting with you, Amy, but maybe then turning to Karthik, which is, your Carbon Measures was launched a couple of weeks ago. And it's fair to say, as the conversation develops, and we've had some further conversations in the last 24 hours, it's starting to become a bit clearer, certainly for me. And you're getting some challenge, but when it comes to the technical panel, just tell us how it's going to work.
Yeah, absolutely. And so one of the things, a few things that we were really focused on is, one is demonstrating what we are all about and how we're going to approach things through action. And so we want to demonstrate we're going to move fast, right? But we're also going to be very collaborative with respect to our approach. And so we're really excited about the partnership with ICC around this, because I can't imagine having a better base of stakeholders than 40, I can never remember how many,
45 million,
45 million companies
countries
around the world, 170 companies. To be able to tap into that network and that know-how is invaluable. The other thing that's really exciting about the partnership is that ICC has a process for doing this, and an experience with respect to driving independence and the outcome is standards. And so yesterday, the ICC issued a call for interest. And so while Karthik and I know a lot of people in this space who bring a lot of great expertise, we wanted to make sure that we were broad with respect to our outreach, to make sure that we get the best of the best thinkers around this. The next thing around the panel is that we are absolutely putting together a puzzle, right? So we want to make sure that we've got representation from business, representation from academics, and representation from NGOs. We also want to make sure that everyone who is represented brings the right expertise and the right mix of expertise. And so we need people who are experts in accounting. We need people who are experts in data. We need people who understand complex supply chains. We need people who understand cost accounting. And really importantly, we need scientists, right? Because at the end of the day, that's what we're measuring. And so when we pull this panel together, Karthik and I will play a big role as the co-chairs on recommending the panel, but the panel does not go forward without ICC agreeing that it's the right mix that will come out with the outcome that we all need.
And Karthik, how's it going to work in practice?
So as Amy said, one of the things we're trying to do here is take what are robust principles for how to account for emissions in supply chains and to actually let them hit practice, let them be applicable in practice. So as someone who's spent about 25 years now on financial accounting issues, including auditing of financial accounting issues, say financial accounting is complex in part because you're counting money. And money is a social construct, and that results in all kinds of sort of challenges, technical challenges, and you have to come up with social conventions as part of the financial accounting system. As someone who's now spent the last 4 years in the space of accounting for carbon, and I use accounting in a very specific sense in which we use it in the context of financial accounting, I can tell you that carbon accounting is vastly simpler because you're counting moles of CO2 that go out into the atmosphere as liabilities, and you're counting moles of CO2 that are captured from the atmosphere and indefinitely sequestered as assets. And so there's actually a physical reality underlying the basis of what you're counting. You are effectively bound by the first law of thermodynamics. Effectively, energy cannot be created or destroyed. So that actually makes the process of carbon accounting at a conceptual level vastly simpler. Now, we take that conceptual foundation and we say everything material must be counted. It must be counted only once, and it must be allocated to products, and those products then move through the value chain. Now, how do we deploy these conceptual principles in the context of a vastly complex, globally interconnected economy? How do we do it at a reasonable cost? We don't want the cost of the system to be so prohibitive that it actually undermines the whole effort. How do we do it in a way that small businesses can also participate in this process? How do we do it in a way that we can effectively have some sort of global system that consistently ensures that there is no overcounting or undercounting in the process, right? So in the context of financial accounting, the monetary system, which is managed by central banks, eventually by the Bank of International Settlements, which is the central bank for central banks, these are all really important institutions. We're going to have to, as part of this process of creating carbon markets, we're going to have to create the equivalent of these institutions. This is obviously going to take some time, but the underlying basis of accounting that drives that is going to be what's central, and that's what I'm hoping that this panel will sort of, seed. And I'll give you, if this all sounds very, very sort of hard to accomplish, I'll give you the historical parallel. So in 1935, up until the year 1935, we had no such thing called GAAP, or generally accepted accounting principles. It's very hard to believe today, but companies that traded, for instance, on the New York Stock Exchange, made up their own definition of revenue. They made up their own definition of asset, et cetera. And that, of course, was just sort of absurd. So in 1935, 17 people got around a table, and they created something called the Committee on Accounting Procedure. And they set about, in the course of 5 years, defining the core principles of GAAP, generally accepted accounting principles. So we're hopeful that this technical expert panel will be that sort of seeding institution that sets in motion, in some sense, this movement or this action that will allow us to robustly count carbon in value chains. And just like the Committee on Accounting Procedure doesn't exist now, we don't need it because we've done the job. I'm hopeful for us, success is that the technical expert panel delivers on this, that mature institutions in this ecosystem pick up on it, and then of course this is a market that unleashes trillions in value creation.
Thanks, Karthik, and thanks, Amy. And I could ask, is anybody in the room from that 1935 committee, but I'm sure there isn't. But there's two points that I wanted to build on, if that's okay. You mentioned SMEs, small businesses, and I'll come back to you in a second, Gabriele, with a question, which is, and actually this is probably the 5th time I've heard reference to SMEs in the last 2 days, which is the importance of they as change agents, as well as the large sort of corporates. I think the second thing is, and so I've personally 30 years of working in energy, but also in capital markets, and the lessons that I've learned working with CEOs in capital markets is how do we keep the description simple? How can we show a line of sight between outcomes and value? And the better we are at demonstrating that, the stronger the markets react to valuation. So those are, as I come into this process, and I said it this morning, actually, how do we take this method and actually then translate it for investment bankers and so on and so forth. But to you, Gabriele, and I'm sure you're not going to tap up all 47 million of your members, but I'm sure you have a process. But how are you going to approach, I guess, going about the engagement with business and stakeholders, just so that actually it's a representative and it's reflected in the technical panel's work?
Thank you, Colm. And I think just stressing the points that Karthik and Amy brought, this is a business-led initiative, but it's very centered on experts. So I think that's at the heart of what this initiative is doing, is relying on experts that bring practical insights from companies, standard setters, investors, and civil society. So it's really bringing in all of these of this knowledge to help set the parameters. I think additionally to the technical expert panel, this initiative will count on advisory group. So that will have 25 senior corporate and nonprofit leaders that essentially will act as a sounding board. So we do have a technical experts, but you have an additional instance of other experts that will help understand, are we going the right way? How are we thinking about this? And also are going to be ambassadors. So I think one of the key things for any new initiative, and one as big and impactful as this one aims to be, is you need buy-in. So if the private sector, if the business community doesn't really understand it, is not familiar with it, and it's not, at least, I think, Amy, you put it very well, willing to have a conversation, a debate, and contribute to it, whether you agree or not, whether you see a better way for this to operate. I think that's really the key issue here for an institution like ICC. We're very used to looking at things not only from a multi-thematic point of view, but from a multi-sector. And this really allows it. It's very difficult when trying to build consensus. I can tell you, when we're trying to build a policy suggestion for any government, it's very hard. But it's really finding the common pains, the common denominators to which you start having a conversation, and then you really build what is the roadmap that we are going to have with this. And just to really understate, the legitimacy of a new way of counting carbon is absolutely paramount. If this is not understood to be built on actual expertise, taking into multiple sets of views, or that it's skewed to one industry when the intention is that it's really multi-sector, then I think it won't succeed. So this is where we come in with in participating with this, is to bring in that power of the private sector, not only globally, but multi-sectorally as well, to make sure that we're looking at this from a neutral and credible point of view.
Thank you, Gabriele. And just to recap for a moment, so there's been an independent call to action. So there will be people coming forward from, quite a vast market. Advertised as sexy accounting may bring a different type of.
That's not on the advertisement.
Is it okay? I just wanted to clarify, but I think just to re-emphasize the point, there is a wide call to action. There's also access to your advisory panel as well, Gabriele. I guess that takes me to data, Mark, and just a question for you around putting some boundaries around data and data quality. So what research have you developed or intended to develop to support the approach? And I guess S&P's views and involvement.
No, thanks for the question. And I mean, there's no doubt that what's foundational here is the quality, as I said at the start, the quality and the trust that needs to be put into the methodology that then creates the data. I think part of answering that question will be the job of the expert panel. I mean, no doubt you're going to bring together some of the best and brightest from industry, from academia, from the various stakeholders who are looking to find solutions around reducing carbon emissions. And so that I will just say that in our experience, the key is collaboration and transparency around a methodology that is very, very clear, but that can also flex based on input and signals from the market. That is part of our experience here. And that just consistency around the availability of the data and how that can be deployed. I also wanted, if it's okay, just step back and share a few thoughts, doubling down on the points that Karthik was making, especially around the generation of the data. Because as we thought about this initiative, as big as it is, we try to bracket this around what's the opportunity, what's the appetite, and is the timing right? And there's no doubt that the opportunity and the appetite is there. I mean, the opportunity for having better means of accounting for carbon, and knowing that the science says you can count for carbon in terms of emissions and sequestration. And that the appetite is there. As we've traveled the world, companies are calling out for, give us something we can depend on so that we can transact and make investments accordingly. And I think the timing is as good as it's ever been, mainly because somebody mentioned earlier the US, which is exactly why what the carbon measures effort is all about. It has to withstand the ebbs and flows of geopolitics over time. That is something that everybody buys into and can see that we're going to generate data from a methodology that we're all bought into that can then allow these markets to form, allow competition and innovation, which makes markets better, and the efficient deployment of capital around decarbonization that will then enable this thing to continue on into the future and not be at the whims or the movement of geopolitical tensions. That's what I think will make this really a foundational effort by the industry.
Thank you, Mark. I'm going to come back to that shortly, and maybe to Karthik as well, just around data. And I guess the words that come through my mind is opportunity and how we engage the market in, back to my opening comments, we were right in the thick of the practical transformation. We can see progress. But I guess, Amy, I'll start with you, which is, what about the role of other organizations? And I guess my reaction when I got introduced to carbon measures was, this must be an and, because there are other organizations, many of which we're involved in. But I'm keen to pose the question to you. What's the role of others working alongside you?
Yes, absolutely. So others come in a number of different ways. So I'll just start from the top with respect to, we wouldn't be here today if it weren't for the work that had been done by others. But a lot of times when you look at the work that's been done, a lot of it has been about shedding transparency on enterprise level disclosures. And as I said in my opening remarks, our purpose is to ensure that companies have the data that they can use to compete, and regulators have the data that they can use to regulate at a product level. And in order to do that, so people could say, well, my company knows how to do that, or there's a standard in this industry to do that, or there's some other way to do it. But the point is we've got to get to the same level of like generally accepted accounting principles. So the first step of the expert panel is looking through what all is out there and what can be captured on it. Now, we have some guiding principles with respect to, we really strongly believe that you've got to, in order to compete at the product level, you've got to apply our learnings from financial accounting. So there are some things that we really do feel like we have to hold dear. But there's a lot of great stuff out there, and we don't have to reinvent the wheel if there's great stuff to learn from. So that's sort of the starting point. The other thing is there'll be different ways to engage, whether it's on the expert panel, whether it's through being on the advisory council. But the other thing that we built into the governance around the panel was that we're going to seek presentation from others as well. And so if there are those that say, look, we don't necessarily want to sit on the panel, but we want to make sure that as your experts are looking at this problem, that they understand how we've been thinking about it, that would be absolutely welcome. And then I guess the last thing I'll say is, I get asked a lot, like, why can't this just be all like one thing? You know, why can't you just adopt something else? And that gets to this point around, we have got to get to the level of the data at a generally accepted level so that companies can compete. And we just don't see it out there right now. And so that's the problem that we're trying to solve. And so everyone wants to simplify. No one wants to have to do things multiple times for the same reason. But we don't think that you should combine methodologies just to combine methodologies if it's not going to solve the problem that we're setting out to solve.
Thanks, Amy. And actually, I'm keen to open this one up a little bit more across the panel. But Gabriela, you represent a lot of people, a lot of organizations. Are you getting similar questions around the involvement of others? What's your perspective?
Absolutely, and I think as Musa said in his opening remarks, I think carbon accounting has been a topic that has been cropping up very much and I think Brazilian companies are at the forefront of a lot of sustainability issues. But as the other panels also mentioned is, I have all of these different ways that I'm looking at this. Why can't we have one coordinated standard? And I think that's essentially, as I mentioned, the heart of ICC. But as Amy also pointed out, this won't work, and I'm not putting words in your mouth, but essentially the message is, if business is not engaged, if it's not willing to share its business cases, ideas. So it's really ICC, and we're not coming into this with already an end goal, and this is what is going to be, and it's already fixed. I think as all of us pointed here, this is a work in progress. This is a construction that will really have to rely on the real economy. It's understanding how business is done, the operations of companies, the data, the science behind all of it, to then come up with a framework that is understandable. And I think that's a really key message here, and that it's more or less easily usable for businesses at large, be it a large company, but then you also mentioned SMEs, and I think this is such a crucial point when we're creating standards, when we're creating new frameworks, who is it for and how we're bringing everybody into the conversation. If you look at SMEs, they're responsible for a lot of the emissions. And being more sustainable for them is a fantastic value add. So for them to be able to say, this is my carbon footprint, this is my impact, this is how much I'm reducing it, is also very valuable. So I think that is really something to take into consideration, sort of the whole ecosystem of business entities as well.
And thanks for mentioning SMEs again. I think that is definitely resonating from, I guess, the last 2 days of conversations. And I guess just to draw on Karthik and Mark, any further builds in terms of, as you work across and inclusive of other organizations?
Sure. So let me pick up on a theme that was implicit and explicit in what Amy and Gabriela just said, which is this is about competitive differentiation, right? I mean, markets work on the basis of competition. And if you want this to be a pro-market way to incentivize companies to collaborate, to decarbonize, then you need to create a competitive instinct there. Every single company that has piloted the ledger-based product level carbon solutions that we've been working on last few years has done it because they can produce a product, whether it's a bag of cement, a bar of steel, a barrel of oil, they can produce a product at lower emissions than their competitors. And they want to, find a way in which they can price that, right? So by commoditizing carbon, by having an accounting system for carbon, you can decommoditize all these other things like bars of steel, bags of cement, barrels of oil, whatever it might be. And that's what unleashes the competitive force here. So that's the reason we have accounting in the first place. Accounting, sounds arcane and so forth, but it is the basis of writing. We as human beings didn't bother to write anything down until we started keeping accounts. And when you look at the origin of writing in the Sumerian civilization, 3000 BC or something, it's just basic things like Tom owes Bob a bull or something like that, or a bushel of corn or whatever it is. So it is so foundational to our civilization. It's so foundational to everything we do. So that's it. The other thing that is worth sort of just emphasizing is this distinction of the term accounting from disclosure. Because as Amy mentioned, we have a rich and vibrant disclosure environment, and we want that to continue. Markets thrive on that disclosure environment. But disclosure without a verifiable basis of accounting is a recipe for chicanery. It is a recipe for basically the structural collapse of markets. And this is the lesson we learned in 1929. Now, what makes accounting distinctive? One of the things that makes accounting distinctive from disclosure is fungibility, right? So you can take the numbers from one company's ledger as the product moves to the next company in the value chain, and you can add it onto that other ledger, right? And that fungibility is at the heart of making things work. And as you move products through hundreds, thousands of layers of value chain, the numbers still need to be fungible. That's why we need an accounting discipline. And that's something that you will never get in a disclosure environment. That's the power of accounting. That's the beauty of accounting. I get very passionate about these things. But it's so foundational to capitalism. It's so foundational to how markets work. So that's why I think fungibility is something we really want to double down on in making this thing work in a global economy. For small businesses, big businesses, any kind of business that wants to compete.
Karthik, thanks for your passion. Mark, any further builds, and then one more question for you.
Sure. The thing I would bring out, it was mentioned earlier that consumers care. And so as you think about trying to align hundreds of countries, millions of companies, and think about it, billions of people, when this effort is successful and you can differentiate low carbon from higher carbon within a product. And most of my career was spent in and around the chemical industry and thinking about durable and non-durable goods that we all consume, which is what drives a big portion of the demand for a lot of the industries that are represented and that are in the coalition. And so how do you create that data that now enables the consumers around the world to make the choices that they want to make, which then allows the market mechanisms to kick in and to begin to work. So just think about different things that when you go to whatever store you go to and spend your hard-earned dollars, what are you looking for on a label that informs you as to whether you're going to buy one thing versus another? And so to the extent that bringing in other groups to help in this effort, maybe not right away, but eventually the consumer ultimately is the person who has to be educated in terms of creating the marketplace for low carbon. Because I can't tell you how many conversations I've had with company CEOs who said, I want to make the investment, but how do I get the value for it? I don't know what the value of the product at the end today is in the marketplace. And until we can help that along, then it's going to be an issue. So again, this helps us get there.
And I guess between Karthik and Mark, I said I would come back to the opportunity discussion, and let me just frame that for a moment. So, again, a pleasure of my job is working with CEOs on a daily basis across the globe. Very often they're lonely. It's a lonely role. I'll not take a poll in the room, but it can be a lonely role. As we're trying to deliver strategy, there are definitely headwinds. You could also see lots of really great examples of progress. There are mixed views from the investor community. Some are very green orientated, some are just purely about capital and return. So I guess what I'm really trying to get at, and I mentioned it this morning, is what's the opportunity here to help more closely wire opportunities and outcomes, help CEOs really deliver their strategy. And it's a question we hadn't prompted prior or practiced, but I just thought I'd lay it in just to see what maybe start with you, Karthik. What's your view?
Sure. It's a great question. And one of the first companies in the world to pilot this ledger-based product carbon accounting solution was a tire company in Indonesia, right? And the CEO read the original Harvard Business Review article that we wrote on this and said, well, this sounds like an interesting idea. Let's try it. And so, of course, they did, calculated what is the embedded emissions in a standard passenger sedan tire. And they said, well, and if we use whatever is the off-the-shelf technology available to decarbonize, say, carbon black, steel cord, synthetic rubber, which are key elements in making the tire, we can get you a 22% reduction in the emissions per passenger car tire for an 18% increase in costs. Okay, doesn't sound like a great trade-off at that point. But they take that to their customer, which in this case is one of the world's largest automakers, and they say, look, we've just done this. This is the value proposition. The customer says, well, that's interesting. On our luxury vehicles, top-of-the-line vehicles that sell for over $100,000 per car, we're happy to take that because our customers will pay that easily, the 18%, to have the 22% lower on the tire. But for our entry-level vehicles, this is clearly not a good proposition. So we want you to ride down the cost curve on those technologies and get us a better deal, right? And so they started scaling this out to their others. So this company makes tires in Indonesia, but they also make tires in China, et cetera. So they started scaling this out to their other manufacturing facilities in order to be able to ride down that cost curve so that they can now take that data back to this customer, which is one of the world's largest car companies, and say, look, this is the proposition now. And that's a more compelling proposition for scale. This is an example of how markets work, right? You put this information in value chains, suddenly you're having these conversations with customers on dimensions that you weren't previously having. You normally talk about the cost of the product, the quality of the product, the timeliness of the product, but now you're having this conversation on the embedded emissions of the product. And that's actually driving your production choices. It's driving how you actually formulate the technology through which you make the tire. It's driving your supplier choices. All of the things that, basically is how markets work. So that's what good accounting information does. We say robust information creates its own demand, right? And that's effectively what Mark's also talking about. So that's really what we want to happen here. And of course, now there are many such examples. I just gave you the very first example, but there are many such examples.
I'll just add quickly on Karthik's point. I think as this moves forward, maybe this is obvious, but it's the developed markets, the developed world, where this will be adopted first because of the affordability. In emerging markets around the world, we're still worried about energy access, energy affordability, some of the basic needs before you start getting into some of these other areas in terms of decarbonization. And so I think that's what I would reflect on there, is that success in the developing world will ultimately lead to success in the emerging markets, because as they move downstream, upstream, downstream in their investments, they'll be deploying some of the most advanced energy efficient technology as they do start to develop their markets, right? And so that's just a thought there, that it is in the developed markets that this will take place quickly, or can take place faster versus the emerging markets.
And just a build for Amy, and actually, I suppose I'll express it as a slight disappointment in that I haven't heard the use of the term AI once, and in fact any of the panels have been hinted in today, but if you take a future back view, and AI is prevalent, there's substantial reach, as you say, Mark, we're potentially going to reach billions. That's the ultimate game. And sorry, I've doorstepped you, Amy, but any views on how that could play a part?
Absolutely, and you're probably cheating because you would have heard me talk about this in my past life. But so I look at AI in two different ways, right? And I think when we're talking about this carbon accounting discussion, both are really important. First of all, AI for good, right? And I think that we're just now starting to scratch the surface of how AI can be used to address some of the most challenging situations that we as humanity face. And I think there's absolutely a role to be played with respect to AI when you think about how you do the carbon accounting, but then probably even more importantly, how you use the data from the carbon accounting system to drive decarbonization. But you'll be having that foundation of better data. And I think Pedro raised a point that I hadn't even been thinking about. Like, if we don't have this good data, then we run the risk of hallucination and not getting the benefit that we were hoping to achieve. The other side of it is that we know that AI will be energy intensive. We need to build new data centers. We need energy to power them. And that's cement, that's steel, that's electricity. And so we need to make sure that we've got the demand signals across the whole value chain so that as that really important infrastructure is being built up, it's built up in a way that's going to be lower carbon than it otherwise would.
Great answer. I'm sorry for layering that in, but I actually thought it's an obvious part of the machinery and thinking going forward. So I guess my last question, to the entire panel is, this has been quite wide-ranging. I started with the role of the private sector. We are right in the middle of transformation. I think if we see this through, we will absolutely see change. And the range of views here have been not just AI, right through to inclusiveness, through to incorporating all sorts of models, and the views of industry and SMEs. Let's emphasize that. So let's come back to how we're forming the panel. Karthik, I'll maybe start with you, but just making sure, what is there criteria, for example, just around the range of expertise, the type of people, the stakeholder management, etc., that we're really trying to incorporate into this panel?
Yeah, absolutely. And this is going to be a multidisciplinary effort. And we've you've already seen this in terms of the kind of people and the kind of communities that are leaning into this conversation. So, obviously at the core of this, you'll have the financial accounting community and the financial auditing community, but now applying their skill set, the principles of accounting and auditing to count carbon. So there's that. You need the chemical engineers. They're going to be an important part of this. You need the production engineers, right, who are the people who make choices in value chains about what are the appropriate set of supplies here, what are the appropriate set of energy sources we can draw from, how do you actually design a product in this context, et cetera. You need them to weigh in on this. These people are going to be in the companies that lend their support and expertise to this. You need the blockchain experts or the AI experts, the data experts that will structure this. Likewise, and we've just run this conference, a technical conference with the OECD and the BIS and others on this in Amsterdam. You need people who represent that central banking community because they're, just like in the financial accounting system, they are the bedrock of how it is you coordinate this at a global level. So you're going to need the equivalent of that expertise leaning into this, et cetera. So it's the whole sort of ecosystem, Amy used a lovely metaphor of a puzzle. And you're trying to sort of fit the pieces in the puzzle. And as we go through it, we're going to realize, okay, now we need this person to lean in or this skill set to lean in. So it is going to be that on the basis of sound accounting principles.
And Gabriella, your input, and then I'll finish with Amy.
Sorry.
Your comment just in terms of making sure we get the right formed technical panel.
I think Karthik laid it out very, very well. I think it's looking not only at sort of the type of expertise, but I think one point that for ICC is very important is regional expertise and diversity as well. So I think it's one of the things being a global institution that we've learned a long time ago is that it can't be viewed, any initiative can be viewed as either US-centric or European-centric, or it really has to take into account the diversity and the challenges and the different perspectives from all over the globe. And I think, obviously, being from Brazil, I can assure that experts from Brazilian businesses and academia and scientists have a lot to contribute to this. So, from our perspective, it's really making sure that this is a expert sound initiative, but it's also bringing in the diversity of points of view that is necessary to look at this from a really complete, as much as we can, way, so as not to leave anything missing, any point uncovered.
And I'll be super quick because I think we're out of time.
We're getting warned.
But one of the things that's going to be critically important is that we have thinkers that can help us get from what has been done through amazing academic study, pilots, to something that can be actually implementable at scale. And so we need those experts that help us put it into practice, and that's what's going to lead to success.
Thank you, Amy. I have two more things to do before Colin throws me off the stage. The first one is, look, let's Can you just join me in sort of thanking the panel? It's been very open. And I certainly walk off the stage with a lot of confidence, so thank you to the panel. I guess the second thing is to welcome back Musso and Darren to the stage. You're gonna, Musso, I think you're hosting our next panel, so thank you all.
Okay. So Darren, thank you very much for being here today. I know it's an interesting week because it's the COP in Brazil, climate debate, the first COP in Brazil after 30 years, very high expectation of that. But it's not your first COP, right? You have been to many COPs before, right?
This is my third COP.
Third COP.
First one was in Dubai and then Baku.
Okay.
It's good to be here.
And then tell me about, just before going to carbon accounting, we heard a lot about this on this morning, just to wrap up. But before going to that, just explaining how the Exxon has been many, many years in Brazil. I myself also worked for Mobil back then. But how the legacy of Exxon, how you look into the format that Exxon has on the energy sector in South America?
Sure, I'd say our experience here is very consistent with, frankly, experience we've had all around the world. We've had a presence in Brazil for over 100 years. In fact, I think we were the first oil and gas company in Brazil, and we've got a very diversified business. Today, we've got about 2,000 employees in Brazil. We have a very successful chemical business here in Brazil. We have a support center that helps all of our operations around the world here in Brazil. And we've just started up our first production unit in Brazil last month, and we've got lots of acreage that we're very interested in exploring and working on. So we continue to have a very big footprint, continue to look for opportunities to grow the business here, to contribute to Brazilian society, as well as providing products that help improve people's life all around the world.
Oh, great. I remember there was a plant in Rio from 1897, if I was looking to that, Standard Oil. It's even before the Exxon name. That was how long Exxon has been in Brazil. Darren, Exxon is of course, one of the giants on the energy sector around the globe. What have you seen? You have seen a lot of climate policies over the years. Of course, you have been through a lot of debates. What's working? Why it's not working? And give me some. This morning, for those who are not aware, we had a breakfast, and you talk a lot about the end, but can you give me your perspective? What's working, why, and what's not working in particular?
Yeah, I think, if you look at what the world's trying to do to reduce emissions, and I should start by just saying this is not our company. I think more generally the industry doesn't take issue or exception to the objective in terms of what the world's trying to do with reduced emissions. I think the bigger challenge and where we have a lot more debate is how we're trying to accomplish that. And so as I look around the world and I look at the policy that's been implemented around the world, with Europe being kind of the epicenter for it, it's been, first of all, driven by ideology maybe more so than the practical realities. And you've got the government essentially trying to dictate a solution set to solve this problem across its economy. And for me, frankly, it's very, very much like a centrally controlled, centrally planned economy. So you can think of the communist countries of the past. You can think of North Korea, East Germany, the Soviet Union, Cuba today, where you try to control the economy by the government dictating how best to achieve the outputs that the economy needs to deliver. And there's no example anywhere in the world where that has been successful. So I think one of the challenges is today policy tries to dictate the how, versus I think what we see, what works today is governments dictating the what, and then the industry and the market figuring out how to achieve that what. So I think that's a huge issue that we've got for policy all around the world. I think the other real challenge with policy is, frankly, the problem statement that the policy is trying to address. The policy statement is not getting rid, or the problem statement is not getting rid of oil and gas. The problem statement is getting rid of the emissions associated with the combustion of oil and gas. And that problem statement leads to very different end results. And I think what we see around the world is, frankly, a lot of policy in terms of how we stop the supply of oil and gas versus how we stop the emissions associated with the combustion of that. And that then limits the policy and the solution set and actually leads to what I think are very inefficient approaches and, frankly, potential outcomes that the world does not want to see. You cannot solve this problem by eliminating and stopping supply that today is absolutely critical to economic growth and to the well-being of the constituents of every politician around the world. And frankly, that's the challenge that we see right now in Europe, is this emphasis on cutting supply out without real affordable, reliable alternatives available today is what's causing a lot of the problems that we see around the world. And frankly, one of the reasons why there's such a pushback against these policies is because we've lost sight of what we should be debating is how do we reduce emissions, and we've now gotten focused on whether we should get rid of oil and gas, which I think is absolutely the wrong debate to be having.
We have, during over the years, many examples that humanity found solutions for, like the ozone, or even I was talking to you on backstage about how we tackle, for instance, the diesel problem that we have on the acid rain. Can you just give examples? Because for me, that will connect a lot with the carbon accounting in the end of the day on being able to measure things. But I think we do have good examples over the years, especially on the oil and gas industry, that worked. And we are trying on this COP to be based on what has worked and presenting to the public sector examples of things that work. So maybe if you could give some examples of things that worked over the past 20, 30 years and how we can connect that to carbon accounting.
Yeah, so let me start with as I came into this job and reflected on the role that we've had in this space, and coming back to the point I made earlier, which is we don't object to the ambition of reducing emissions and potentially maybe one day getting to net zero, but instead object on how it's being approached. What we weren't doing is providing alternative solutions or approaches that we think could effectively work. And so in reflecting on that, we step back and say, well, if it was up to us, if we looked around the world, what has worked? What do we see working? And to your point, Ricardo, it wasn't so long ago that we had a problem with sulfur dioxide associated with the combustion of diesel, and that's its contribution to acid rain. And so the world decided we needed to reduce sulfur dioxide, and how did they choose to do that? They put sulfur specification on diesel fuel. Governments didn't decide how to desulfurize the fuel. They focused on the objective of getting rid of the sulfur that's in the diesel, and industry then went to meet that specification. Now, there was a critical step in the government working with industry to understand at the time that was implemented what's feasible with respect to the sulfur reduction that you can achieve given the technology. And that's where they started. And then over time, they ramped that specification down. And every country around the world eventually adopted sulfur specs for their fuel. They started at different places, and they ramped them down at different rates based on the state of their economy and what they could afford. But over time, the world desulfurized diesel. And I would challenge anyone, we certainly can't do it, to understand what that cost. Because ultimately, the market determined the price, and every individual company that was making that product, its price, its cost, was a function of what it had to do to achieve that specification, and the market bore the price. It gets the government out of the business of dictating solutions. It got the government out of the business of collecting revenues and taxes and then redistributing that wealth and picking the technologies to do that, and instead let market innovation. And frankly, it gave us as a company an incentive to compete and to innovate and to bring our costs down, because the market price was set by the least efficient supplier required to meet the demand. And my job was to be more efficient than that least efficient supplier. And however good I was at that accrued to my benefit and to my books. And the market then set the price. The market bore the cost. And it drove competitive forces, which I think ultimately is going to be required for this to be successful. Now, the one thing that you need to even begin down that path, that journey, is you need a good carbon accounting system. It amazes me today that when we're talking about something so important as emissions and climate change, and many people talk about that being an existential threat to the planet, that potential consequence, and certainly the seriousness of what we're trying to address, that even as we sit today, we don't have a mechanism for accounting for carbon emissions. And it seems to me, as a long-time engineer and problem solver, you start by trying to measure what you're trying to manage. And so irrespective of what society thinks the right answer is, ultimately, we're going to need a mechanism for accounting for the CO2, and so why not get started on that? And the good news about that, and the point I was making earlier today, was you can do that without stopping anything else that any government around the world wants to do. So if you're a big fan of whatever policy that exists, we don't have to debate whether you stop that and start this. You can do this as an and eventually we're going to need it, so why not get started on it? And the final point I would make is, as I've talked about this in the past, many people raise the concern of how hard that's going to be. And I acknowledge it is going to be hard, but who thought desulfurizing or decarbonizing the world was going to be easy? We've got 150 years of industrial activity that we've built our economies around the world on. Figuring out how we decarbonize that is going to take real effort, and it's going to be hard work. But we got to get started on it. We got to move away from aspirational goals and get very focused on developing plans and actions. One of the reasons I'm so happy about this COP is it's an action COP, and I'm hopeful that actions do come from this, and to figure out how we get from a vision state to actual plans that help us achieve the objectives that I think people around the world want us to.
And Darren, talking about more on, we heard here Amy explain about Carbon-Managers, a very recent association or a new venture that it was from. What prompted Exxon to join forces on Carbon-Measures? Why you are really supporting the creation of Carbon-Measures?
I think it's common sense. It's very consistent with how we manage every other part of the business. It is applicable to every sector. You know, the beauty of that is if you get your carbon accounting right, and then if you move to carbon intensity, you can set that by sector based on the inputs required for those sectors. So it gives you a lot of flexibility. As I said, it allows you to set that around the world. It gets rid of carbon border adjustments because you can't sell products in a marketplace unless you meet the specs. And so it simplifies things greatly, and it puts the burden back into the market and the drives back into the market, which I think is fundamentally critical. So I think the work that Amy's doing with this coalition is very consistent with what macroeconomics would tell you is necessary for, in the long run, to make things work. And so we're very, very supportive of it. I mean, in the end of the day, ideology only takes you so far. And then you got to get down to the hard work of the accounting and the science and the math. And I think, you know, hopefully the world's beginning to realize that the solutions that have been advanced so far have had some impact, but is limited, and we've got to open the aperture, and there's more that has to be done. And I think the good news about carbon accounting and then ultimately carbon intensity standards is the beauty of that is it allows you to start to decarbonize what we already have. I mean, a lot of the policy today is based on eliminating what we've got and replacing it with something new. And that's getting rid of 150 years of investment. It's extremely expensive. It's going to take a lot of time. And it's going to be, you're not going to get the same level of emissions reductions as trying to do new things, the replacement strategy, and at the same time decarbonizing what we already got. And that way, we don't have to decide what things are going to work. We can do both of those and make progress on both, and then let the results drive the activity.
That's the end, right? You don't need to get rid of whatever it is. If the GHG protocol also, whatever it's out there, you're not. I think Carbon-Measures is not coming to in the end of the day, be competing with anything else, right? You always say that, right, Darren?
Yeah, I think, there's not a competition between the GHG protocol and carbon measures or carbon accounting from my standpoint. They're different tool sets. My issue is they're basically being used the wrong way, and certainly GHG protocol, very valid. It allows a company to understand its total impact with respect to emissions for the value chains of the businesses that they're in. I think that's a useful perspective. To convert that, though, and translate it into an accountability metric is where you start to have problems. And so, frankly, in my perspective, holding a supplier accountable for Scope 3 emissions, which are the emissions of their customers, I think you start to mix up the accountability. The only way that an oil and gas company meeting the demands of society today can reduce its Scope 3 emissions is to stop selling product. And today the market doesn't have a viable alternative. So what it suggests is that we start depriving people of the demand that they need. And the analogy that I always use is like holding McDonald's responsible for the weight of its customers. There's no doubt that the calories in the hamburger contribute to people's weight, but we don't tell McDonald's that they can't sell a hamburger to somebody who has a weight problem. I think this is the same issue for us. Now our challenge is to figure out better solutions here and to work on lowering the emissions, but it can't be by cutting demand short. I mean, think about it. There are 4 billion people in the world that are today living in energy poverty. They don't have the choices that many of the developed countries have. And it would be unreasonable to suggest that we should stop providing them affordable and reliable energy to help them grow their economies, to help them raise their standards of living that we're all fortunate to be enjoying. So we've got to strike balances here. We've got to find thoughtful ways to make these reductions without shorting supply. And I think it can be done, but we need to have a broader dialogue. And one of the things I'm so happy about with this COP is that, businesses have been invited and recognized as being having an important role in contributing in this space. And I think it is in being invited to have a voice brings a level of responsibility and obligation to try to constructively contribute with our voices. And frankly, that's why I'm here and what we're trying to do.
No, great. I completely agree, Darren. For me, it has been this COP, one of the legacies that I'm seeing is the openness to the private sector. So we are bringing, as you said, solutions, the right debate in place. Just going to the end here, Darren, it's your third COP. How do you feel about the challenge? Because a lot of people say there is headwinds or tailwinds, a lot of debate. How do you feel about what's happening right now, and especially at COP? What's your feeling and how Exxon is looking to that?
I think, as I look around the world, what we see is the policy that's been in place, the solutions that have been advanced have the benefits, but some of them are necessary, but they're not sufficient. And in fact, what we're also seeing is that many of those solutions come at a very high cost. And society around the world is beginning to realize that cost. Not just the economic cost, but the cost associated with reliable supply, in addition to the affordability. And so I think there is a growing desire to have a broader solution set that addresses not only the emissions challenge, but the other aspects that impact our lives. And so I think there's a receptiveness to a dialogue. So I'm encouraged, and I think this COP reflects that desire to have a more informed discussion, a more diverse discussion with people and businesses and companies that have experience in the relevant spaces, all contributing their ideas. And I would quickly add, I don't suggest that ExxonMobil has the answer. We have an answer based on our experiences. Other companies have unique experiences and perspectives, and I think working collectively, you get to a much better answer for the whole. And so I'm encouraged that that's beginning to happen, and recognizing that we can see through a lens in our industry, others can see through their lens, and collectively sharing that perspective, we come up with a better answer. So that's encouraging. I'm not optimistic, though. I think it's too early to become optimistic, and I would point to the challenges that we continue to have in Europe, where today they are recognizing the problem And in fact, behind closed doors, they readily admit that the policies they're pursuing are not working, and it's leading to slower economic growth, in fact, declining economic growth and deindustrialization, loss of jobs, loss of industry, which is a big, big problem from the economy. And yet, the ideology and the political issues that come along with trying to make a change at this stage is, at this point, proven to be too big a hurdle to clear. And so I will become optimistic when I begin to see policymakers recognizing the challenges with the solution sets being pursued and beginning to adjust their approach and open their minds to a broader solution set. And again, it doesn't suggest they have to leave behind anything they've been working on, but they need to start adding things. And I think when I start to see that, maybe we've got a chance of moving the ball forward here. But today, I haven't seen much evidence of that.
Oh, thank you, Darren. Just one final, and just to finalize here, is carbon accounting in your priority level is something that you feel optimistic about what the carbon measures are doing, and how long do you think we are going to have some concrete results coming from carbon measures? I think that's just because I think today, what my role here and Darren has been, I'm really understand the value of that. I was also running a company, so I'm trying to engage as much as possible other companies around that, because I think if this movement gets really, really big, as Karthik said here, then the capital will flow, capitalism will work. So how important carbon measure is for, you think, for the success of the COPs moving forward and this debate?
Well, I think in terms of how long it's going to take and the work that goes into Amy's probably in a better position to answer that with her coalition. What I'm encouraged by is I've heard Amy talk about this in a variety of audiences. I've talked about it in a variety of audiences with a variety of industries and businesses and sectors. And never, in the discussions I've had on this subject over the years with many different audience members, I've never had any pushback in terms of the rationale behind it. Now, obviously, people point out how difficult it will be, and I readily acknowledge that. But the beauty of this is you don't have to eat, the whole apple in one bite. We can start off with, the sectors and the areas where we see the most emissions and begin to work that. And so you can take this, stepwise through. I think fundamentally, though, establishing the principles and the accounting-based, anchored in science and technology around how best to do that. There's a lot of thinking that has to go on in that space. I wouldn't pretend to have thought about it in the level of detail that I know Amy and her organization is going to be doing with this expert panel. But that's, I think, absolutely critical work. And I think as they work through that, the devil's always in the details, and so there will be a lot of challenges, a lot of questions. My view is, we don't have to solve it to the 9th degree. We can get started with things that make sense, that are practical, and evolve it as we go. And so I think taking a practical, objective approach to this that is aimed at achieving the objectives, we can get started and let that grow. And so my advice is to give policymakers the option here and to demonstrate the effectiveness of this option and start to bring that in alongside the other things they're trying to do. In my mind, the great thing about markets is, it lets good ideas compete. And at the end of the day, what wins are the best ideas. And I'm confident enough in this approach that I'm willing to put it up against the other ideas to see which one wins. And based on the foundational elements of this and the fact that if you look at all business around the world and markets around the world, they are anchored in the fundamentals that Amy and her group is talking about. I think that says we may have something here. So I'm optimistic about that work. I don't underestimate the challenges of it, but I do think the approach that Carbon Measures is taking is the right one, and we're going to support it as best we can as part of a coalition of many other companies that are supporting it, and we'll do what Amy needs us to do.
Thank you very much, Darren, thank you for taking the time, and good to hear that there's going to be a lot of support. I'm very optimistic about it. Thank you.
Thank you.
Thank you, Darren. That's fantastic. Really fantastic. Thank you. I'm just going to that way. All right. Just to finalize, I think again we had a great session today. We hear a lot about the details. I think nobody here, if I'm not, as I start the day-to-day talking about, it's very difficult to find someone that is against going to a more detail and understanding better the transparency of carbon throughout the value chains. I think the point now is how to make it work. I think we have the technology, we have the team. I really love Amy here talking about what Carbon Measure is intention about the future. So hopefully today we got more people into and passionate about the subject. I heard a lot about account being more sexy. So I'm not an accountant, but also my daughter yesterday talking to me, Dad, if you have one thing to after COP to really focus on what's most important, I really believe this is something that will make a difference on the long run. So we should take our time and spend more time and really dedicate efforts to make it work, not against other stuff, but really upon and as Darren said here, to make it even better. So thank you for today. Thank you for the time. Thank you for the great discussions that we had, and hope this will help COP to be a success, heading back to Belém tomorrow with all the learnings here. Thank you.